I'm Matthew Previte. I'm a CPA here in Massachusetts. Since 1990, my firm has represented taxpayers before the IRS, the Mass Department of Revenue, and other state tax agencies. We are a small tax resolution firm that offers very personal service. The next thing I'd like to talk about is levies and seizures. Levy is basically the ability of the IRS or the state to take your property because you haven't paid your taxes. When you think of the word seizure, think of a seizure as a levy, but it's the levy of physical property, your car, your house, your physical possessions. Levy is usually used in the terms for bank levies, wage levies, and that sort of things, financial accounts. A levy is basically the ability of the government to take your property because you owe money. And the IRS in the states, they can levy almost everything. The IRS can levy Social Security checks. Fortunately, they're only limited to 15% of your monthly Social Security check. But the IRS can clean out your bank account, take almost everything in your net paycheck, your 401k, after taxes are taken out. They can pretty much take all sorts of things. There are two types of levies. There are continuous levies and non-continuous levies. A continuous levy is where once the levy is filed, it continues until you get a release of levies. So for instance, continuous levies are typically wage levies. Once your employer gets a wage levy, they start taking so much out of your paycheck, your net check, which is pretty much most of it, and that levy continues week after week or with each paycheck until your employer gets a release. A non-continuous levy is kind of a one-shot deal. For instance, a bank account. If the IRS issued a levy to your bank today and you had $100 in there and you owed $1,000, that $100 would be frozen, and in 20 days the bank would send that $100 to the IRS unless during those 20 days they get a release of levy. If you deposit money the day after the bank gets the levy, so for instance today the bank gets a levy for $1,000 and you have $100 in there, and tomorrow you put in $2,000, so now you have $2,100. They're only allowed to levy the $100. Okay, they can't levy on money deposited after the date the bank receives the levy. And that's true also with subcontractor income on 1099s. When, let's say, you're a real estate agent and your employer gets a levy today, whatever's owed and due and payable to you today is subject to the levy. Anything earned after today would not be subject to the levy. Levies can basically be released under one of several situations. If you get on an installment agreement, payment plan with the IRS, you can then get the levy released. If you do an offer and compromise to settle the liability for a small percentage, you can also get the levy released. And typically that's not once you finish the process, but when you file the offer, as long as the IRS has all the paperwork and it's a processable offer, they will, once they get that offer, but before they assign it to somebody and before the case is worked, they'll put a freeze code on the computer system to stop collection action, and at that point you can get the levy released. Another opportunity to get the levy released is if you're uncollectible. If in fact you show the IRS that you have nothing left after basic living expenses and they put you in currently not collectible status, at that point you could get a levy released. Also, if you file bankruptcy, the date you file bankruptcy, the IRS has to stop levying. So if you file bankruptcy, typically what we do is we get a copy of the bankruptcy petition that's date stamped by the court, and we get it to the IRS to let them know that you're under the protection of the bankruptcy court, and at that moment in time, that day that you file the petition, they have to release the levy. Another potential option, and an obvious one, is if you full pay the tax. Obviously, if you have a levy on your paycheck, and let's say you take money out of your savings account and you full pay the tax, once the tax is paid, then you can get the levy released. Last but not least is the taxpayer assistance order. Essentially, if you can show the IRS that after basic living expenses you have nothing left, and you're put in a hardship, meaning they're going to throw you out of your apartment, evict you, or foreclose on your home, or shut off your electric or your power or your water. With certain paperwork you can show through the Taxpayer Advocate's Office, file a taxpayer assistance order, and get the IRS to release the levy. Please give us a call to answer any of your questions, and if you'd like to set up a free consultation, you'll get to meet with me or talk with me over the phone, whichever you prefer, and we'll go over your situation, discuss your problem, what options are available to you, and give you some information to think about in making your choice for a tax firm. Call us at the number above.